All right, you're looking at a daily chart of the Nasdaq, and really, we're in a trendless market right now, which is to me the most difficult market. I mean, it's been a stock picker's market, even though we had this big uptrend, where we stepped on the gas and then we tapped on the brakes here as we had this 9% correction, and now we're just chopping around, going up and down and all around. So this makes it a little tougher and places an emphasis on stock picking. And when the market gets like this, I always could get a little more defensive. Tomorrow I'm going to be on yellow from green here as we're just the Nasdaq undercut the low of the follow through day. But I was going to say, when it's trending like this, you gotta. It's for me. I trade quicker. I take profits quicker when I have them. I take losses quicker when I have them, and I trade lighter, so not as much invested here. And I just wanted to show here as I zoom in. First of all, the Nasdaq opened lower, gap down lower, and sliced these moving averages here. And it also undercut the August 29th low of the follow through day, 13,677. Today's low is 642. So it did it right away and then it came back. So, you don't give up on it. It could obviously just rally right back through and get back into a power trend, and we'll take it one day at a time. But for today, that's not a good thing. And since September started, and I am a superstitious person, the first four sessions in September, September 1, 4, and 5, 6, and 7 have all been down sessions. We have a couple distribution days here, and after a big run like this, you got to expect some profit taking. And I'm bullish longer term, into the end of the year, but this short term stuff it'll get you chopped up, if you want to get heavily involved with that. So you just got to be a little more defensive. For me, I play more defense. I play lighter and quicker and just a little more nimble. And I'll explain at the end of the video of like how if you don't take profits, those things they won't be around very long. Anyway, I'm going to take a look at some stocks because I don't trade the index. I trade the stocks, but it's always nice to have the tailwinds of the index at our backs. And today, Meta just really performed just terribly. You can see here in the morning, it was ramping, and I thought, oh, good, this thing's going to start. It went through its 50 simple moving average, got up to 307 here about a half hour into the session. And then about, I don't know, an hour later, this thing's down. It went from 307 to 292. So a 15-point drop in a very short period of time. What is this, 11:05 to 12 o'clock? So an hour. I mean, it took an hour to go down $15. No news that I saw. Maybe just some more fear mongering with China. I don't know. But anyway, that is not a good move. You can see the move up in the morning made this candle up to 307, and then the move to 292 came within a 15-minute span, and then it just closed near the daily range. Yeah, the middle of the daily range, 43%. So it's still below the 50. And Meta, to me, I mean, that's really that's tough action there. If you hold it long, I was really hoping that it would just power through, but not to be today. Of course, the market was really tough. So Apple, Apple. What can you say? China. I've always thought that China was going to do this. I thought they would do it with Tesla first. I talked to a lot of buddies, and but because Tesla is in stiff competition with their automobile makers, but a lot of the Chinese automobile makers are doing pretty well. But iPhone, they claimed it's security reasons why their government officials cannot use iPhones. But anyway, we'll see how this shakes out. Berkshire owns a big part of it. It's in every index. If this continues lower, the indexes will likely continue lower because it's such a big stock. But we'll see if it can stabilize. Today, this is, if you're a bull, you'd say, well, it's positive action. It closed, 86% of its daily range. So it's well off the lows. You can see the low there today was 173 and it closed at 177. But, still gap down and, nearly 3% lower. And there's nothing bullish about being 3% lower, slicing the moving averages here, but, still in consolidation. So Apple is in no man's land, kind of like the index. Another one is Microsoft. See, I'm taking you down these negative road here. I'll bring you back on the positive track. But Microsoft, it sliced its 50 now. It's taken forever to get back up there. This looks, I'm not going to say it looks like a short, but it does look like a short. It looks pretty negative. This is a bearish wedge pattern, but Microsoft, longer term, it's probably going to do well, but it's just short term doesn't look good under the 50. Tesla, same thing. It's been rejected at its 50 many times. I mean, this is not a pretty chart at all. And so we'll see if China has anything to say about Tesla going forward. Some of the more positive stocks here on the Divine Nine or whatever, the Magnificent Seven, is Google finding support at its 10 EMA today and just showing strength. I showed you the weekly just every day. It's just had this little consolidation. And this week, even though the Nasdaq has been selling off, this is just an inside week. So Google is showing strength. And the other one is Amazon. These are also going to be big winners in the AI race, Amazon and Google. But yeah, China kind of killed the drill today. Okay, I did say I was going to take you down the negative road. That was NVIDIA. There was a report out that they're falsifying their numbers, which is just ridiculous. Jensen's been CEO of that company forever, and I don't know why he would start falsifying data now. But Elon Musk even said that they're the components they can't get enough of them. So I'm sure they're selling everything they make, and they're the big hub of AI. But the stock just sold off, didn't even come down to its 50 today. So to me, I'm going to go over the positives first. Obviously, the negatives that it sliced its 10 and its 21, and it was down 1.74%. But it's making higher lows in the weekly. I showed you this yesterday. It had a low of 403, then 442. Last week was 448. This week the low is 451. So it's got a rising low here, but it just doesn't have the strength. Obviously, the index has a lot to do with that. We just have general market weakness here. And to me, above the 50, it's fine. Now, if it slices to 50, that's a different ball game. And if it makes lower lows, that's a different ball game. But for now, that thing looks fine. AMD, talked about this one breaking above its downtrend line, can't do it. Went up to the 50, got rejected. That's like the bully in the schoolyard just pushing the little kids down, at the moving averages. So AMD got pushed down today. It took forever to rally back up to the 50 and just got pushed back down. So that's a sign of weakness. And I always say you got to allow these things to prove themselves, to disprove themselves. No, it has to trade above the downtrend line and above its 50 simple moving average. Didn't do it, so it's adios muchachos. We'll come back and visit you another day. ACLS, this one was looking good, rallied through its 50. Today, traded back down to it. Darn, this is a bad-looking candle, bad-looking sign for this stock. Closed in the middle of its daily range, right at the 21 and slightly above the 50. So, man, it's just a struggle out there. ON is on semiconductor down to the 50, and this looks a lot like the Nasdaq, just choppy mess going nowhere. Anyway, that's the negative road. I'm going to bring you back on the positive track, and we need drugs to do that. Eli Lilly, my goodness, they have a duopoly with Novo Nordisk on the weight loss and diabetes play right now, and if their drugs are going to help with heart conditions, and cardiologists start prescribing it. It's these things have tremendous growth potential, and you can see Lilly just going up every day, every week. Look at this, just a monster relative strength here. Same with Novo Nordisk. This is an ADR. Lilly's in Indiana, and this is a Denmark-based company. So I think there's a little bias towards the American company here, but this thing breaking above the 4-week base here today. That's a nice breakout. And I should have had that on our watch list, but I didn't. And because the base is really, 4 weeks, I like them at least 5. But you can't argue with the performance of this one. And it just looks like it has 200 in its sights. And once again, had this big ramp up after earnings and just keeps going up and up. It wants higher prices. So to me, the 192.18 is a buy point there. It's a valid buy point. It traded above it today. So NVO looks more actionable than the Lilly, but I'm probably not going to perform like Lilly for a variety of reasons. One, that it is Denmark-based ADR. Anyway, I'm going to move on. ZTS, this is a livestock animal Medicare a medicine vaccine stock, traded down to its 21, found support. Not bad. I mean, within this tape, this is looking choppy, just like the index, but another drug stock that's holding up. There's not many. The drugs have really been clobbered. I'm going to go to the software names, and this is AppLovin, pulled back to its 10, found support. Was that 3 days? Yeah, 3 days of selling off on light volume. And then a bump up today. You can see the volume here since the breakout. And so came down to its 10 and then found support today, in a very weak tape. Splunk, this is another one we've been watching, up every day since the breakout here. I mean, you can't do much better than that, right? It's up about 40% since August 1st. Since the Nasdaq started selling off. So this is really showing relative strength here. And it was, the high was 114 on the breakout day, and now it's at 124. So Splunk is definitely showing strength. ESTC, another one, broke out here on this date, September 1st. So it's been 3 sessions and showing strength. Yeah, pulled back less than 1% today, but another stock just showing strength. And DOL, this is one that I should have had on our watch list, and I missed it because it broke above its downtrend line here last week, I believe it was, and now it's trading higher, traded down to its 10 EMA and found support and closed 87% of its daily range. So, pretty strong today, but the volume is light, but, up 1% when the Nasdaq's down 1%. That's pretty good stuff for Duolingo. Another group that I like that's doing well is the cybersecurity. Ever since Palo Alto reported on that Friday night, it ramped up the next Monday and then pulled back to its 21 and found support. So Palo Alto looks strong. It's just consolidating in this base here. And, you can't expect breakouts when the Nasdaq's acting like it is. But yeah, that was a 14% move on August 21st. Now just trading higher. Zscaler's another one. They reported earnings, had this wonky movement, but there was a really strong support, a strong report, and it hasn't even pulled back to its 10. So OKTA is another one with a strong report. They had a little better reaction, as you can see, up 13.5% with volume, and now it's just trading higher and allowing the moving averages to catch up. But you can see it's just consolidating in this base here. No breakouts. This is just kind of a stage one, still, on the tarmac, ready to take off. OKTA. And the other one was, CrowdStrike. CrowdStrike, yes. Definitely has a buy point here. I'm not going to add it to the list, though, but definitely a buy point here, standard one, and see if it could break above that. It's right there, 167. So we'll see. CrowdStrike, you can see it's still in this like stage one consolidation period after this massive sell-off. So these things take time for them to, repair the damage from those massive sell-offs. The electrical power data center group, still showing strength. This is Vertiv, pulled back the first 2 days this week to its 10, found support, now bounced 3% today. It's up $40 after hours, and this one is just showing real strong. That's a hammer candle with the closing range in the top 10 percentile, 91%. So Vert looks very good. Power, this one is just kind of marking time here. Keeps coming back to the 206.43. Can't really break out in this tape. It's not going to allow it, but this is a stock that just grinds higher. And you could see, it's been a long time. It's just, that was the last consolidation here, which was this spring. So that was this right here back in April and May. So it's had a nice run, but power is just showing strength. STRL too. Sterling Infrastructure pulled back to its 21 today and doing nothing wrong. You got to expect that in a tape like this. It's not going to go up every day. So that one looks good to me. The air conditioning group, I'm just going to go through these quickly. The picture tells a story, just lower left to upper right. There's nothing much to say here with fix. It's just going higher. You got to love it. Linux, this is one of those high-end units, AC units, heating ventilation stock. And this one pulled back to its 10, found support, just grinding higher. You could say that 382 level is an area of interest, 382.40, traded through that today. The other one that I like here is MOD. This one pulled back to its 21 today, found support, up 2%. And the last one is Carrier. This is a 48 billion market cap stock, just consolidating, pulled back to its 50, ramped higher, and now it pulled back to its 21 EMA. So just consolidating in this stage 2 base here. So that one looks good as well. The the soft drink group, Celsius and COCO, these two are just outperforming, looking strong. Celsius, the obvious winner here, just ripped right through 200 today. I was wondering about that. I thought it might hit 200 and reject to get the Matambo treatment and kind of mess around and go sideways like the market. And it still might. But today it ramped right through. And the other one is COCO. And this one's still, it's just trending higher. It's not like Celsius ripping higher. It's just kind of trending higher. And you can see, the lower left, if you're a long-term holder from, January or November of last year, lower left to upper right. I mean, if you're just holding it, you're happy you're happy campers. And let me see, that's it for today, I believe. I'm not going to go through the oil and gas stocks. Those things are looking kind of tired too. They've had a nice run, but I'm going to end it right there, except for one more thing. I have to go through my SMCI trade because I pulled an amateur move here. On the follow-through day on the 29th, my rule is to buy something, and I just kind of added to stuff that I already had, like VRT and Celsius. And on the 29th there, I bought this stock, and it was below, I bought it around 270, and it was below, you could see it went down to 251, and the high was 277, but it's below its 50. And I have a rule not to buy stocks below their 50 because bad things happen. But I bought this one. I've kind of, I had a nice, I bought it at 90 and ran up to 350. So I had a nice, comfortable feeling about SMCI. And I could tell you about your feelings where they're going to screw you. But when I did buy it at 270, it did move up to what, 280 earlier in this week? Yeah, even 286 or whatever. I could have sold it, right, for a nice gain, but I held on to it like a dummy. And today I got stopped out here as it went down to 254. So 270, my stop was, I don't know, around below 260, 258. I mean, so when it sliced us, I just got rid of it, but it did close at the high of its daily range. You can see 97%. So if you look at the 5-minute chart here, sold out, shook out dummies like me who bought below the 50, just a total amateur move, and then ramped higher. But this is what I'm going to forget about until it can rally through the 50. Then I'd be interested because it does have the strong fundamentals. And anyway, I just wanted to share that with you. If you're making mistakes, well, I'm right there with you. That was a real amateur move, but anyway, I shouldn't be doing that. Because you lose money that way. Or, if you bought it below the 50 and you got a blessing at 288, you take the profits. And that's why, you got to play quicker in this game with the Nasdaq selling off. And anyway, after hours tonight, DocuSign, which is another company that, well, it's up 4% after hours. So maybe DocuSign will save our market tomorrow. And the other one is Smart Sheet, which is up, oh man, more than 6% now after their earnings report. Anyway, I am just joking. I don't think those are going to, drive the market higher tomorrow. We know what stocks drive the market, but there is some underlying strength. And anyway, we never give up at MC Stock Charts. And thank you for watching.